When our next guest was here in early November, I asked him why the euro was so stubbornly strong at the time. He predicted the euro would fall off a cliff. It was just a matter of time. Well, the euro did drop to an 11-month low yesterday, so we want to ask him now. Have we reached that point? Giulio Martini is the Chief Investment Officer for Currencies at AllianceBernstein, one of the world's largest money management firms. Giulio, have we seen the euro finally crack?
Yes, I think we've seen the beginnings of the crack, and it's a matter of the ECB really having eased interest rates twice, and I think the weakness in the economy in Europe is just encouraging an easier monetary policy.
Back then you were saying that euro strength was more a matter of dollar weakness. Now dollar is strong. Is it the same? I mean, you were just saying that it does have to do with some of what's going on a policy level in Europe. But I need to know, and I think people need to know, whether this is still a case of the dollar ultimately deciding what's happening to the euro more than the reverse.
Well, I think the momentum switches off from time to time, and really on the margin, it had been the Fed that was really much easier and much more aggressive with, QE 1, 2, and 3, and the willingness to do more. And I think now what we've seen is an ECB that's willing to do more, and that's really heading in the same direction, possibly, that the Fed headed down previously. So we've really switched from a situation of dollar weakness driven by more aggressive easing of monetary policy by the Fed to the same situation now centering on the euro.
You get a front row seat to all the flows and all the action in foreign exchange. Who is the big buyer that had been buying and holding in there pretty much all year and then just bailed this week?
Well, it's always a variety of different investors. And so you've definitely seen flows come out of European assets in fixed income and in equities recently. And I think you've also seen maybe a slackening of the repatriation of dollar assets into euros by European financial institutions. And all of those things really contribute, to the trend of the currency. But I think ultimately it's investors reacting to the fundamentals I was talking about before.
Giulio, how much stock do you put in the decoupling argument that we were just going through a few minutes ago? The idea that there is a divergence that's going to play out over the next several months, maybe even year, between the European and U.S. economies?
I don't really. I think that the fundamentals that are affecting both economies, in other words, the debt overhang that exists in the private sector and that's really shifting to the public sector, is really the big issue that's critical for both. And so I don't believe we're getting a decoupling that's really lasting and something that we're going to see widen as time goes on.
Do you think that the sell-off in the euro is going to be what it takes to force leaders into action? In other words, they'll look at it and they'll say, look, there may be an attack on our currency. We really might have to think about the doomsday scenario that everybody's been talking about now that the euro is actually selling off hard?
No, I don't think so. I think the euro selling off is actually very positive for the European economy because it provides support for their exporters, and stronger economic performance in Europe will help with all the problems that they're attempting to deal with. So I think it really, if anything on the margin, lessens the pressure on Europe as a whole. But I think within Europe, the pressure on, the countries that have to cut their budget deficits, that have to lower their debt, will still be there. So I think a weaker euro is quite a good thing for Europe.
Giulio, gaze into your crystal ball, if you would. Where is the euro headed? Where is it going to stabilize? Are we looking at 125, 120, even weaker than that?
Currencies always move more than people think they can over a long enough period of time. So if we're looking out over the next 6 months, it would not be a surprise to see the euro at 120 or below if we get this combination of slightly weaker European economic performance, encouraging the ECB to continue cutting rates, and then getting to that threshold where it too could engage in more widespread quantitative easing. And that's critical. The Fed, the Bank of England, the Bank of Japan before it have all really legitimized quantitative easing as a tool of monetary policy, and the ECB has engaged in it less than the other central banks. But once it gets to close to zero interest rates, I think that possibility becomes much more of a reality for the ECB as well.
Giulio, thank you for joining us this morning here on the Inside Track. Great to see you again.
My pleasure.
Giulio Martini of AllianceBernstein gazing into his crystal ball, looking out 6 months ahead and saying, hey, euro weaker than 120 wouldn't surprise him, but a few things have to happen first.